markets have shown remarkable resilience over the last 10-15 days, in spite of global markets being wobbly and enough bad news on the geopolitical front, in particular the India-China border conflict. Indian markets have remained by and large steady and shown definite positive bias. Indian markets are taking cues from good monsoons, expectations around economic recovery post lifting of lockdown in phases, and also the significant amount of liquidity which is waiting to get into Indian markets. FIIs have been by and large positive on Indian markets. They have been generally buying, and this is definitely helping Indian markets. Overall, we believe there will be some amount of volatility in the markets, but we need to look at specific counters and specific sectors to build a portfolio for the long term. Amidst all this corona fear and global pandemic issues, the amazing amount of fundraise by Reliance for its Jio platform stands out as a vote of confidence not only on the Jio platform but also on the Indian economy. While Reliance definitely continues to be an excellent buy for a long-term investor, we need to also look at other segments of the economy, in particular rural economy. We believe that rural India is displaying green shoots. We believe that companies having deep distribution reach in rural India will benefit. So FMCG companies like Hindustan Unilever, Dabur, Marico and others, consumer durable companies like Voltas who have strong rural reach will benefit. Rural India has not been ravaged by the pandemic, and the monsoon has been good. The production of last season and the expectation of this season are excellent. MSPs have been stable and steady and very supportive. Government schemes have taken a lot of benefits to rural India, and very clearly rural consumption is expected to pick up much before the urban consumption. Thus, buying stocks, having rural markets, having rural distribution would be a good strategy at current stage. Pharma continues to remain volatile. However, there are opportunities still in pharma, but it needs to be bought carefully and one needs to be extremely stock specific. Infrastructure and other capital goods sectors which are economy facing can also be taken in small doses, but one needs to be extremely careful because the recovery is some distance away.